welcome accounting boffins, you with Ashraf Patel and the crew. And guys, we're busy with fixed assets, how it impacts with regards to asset disposal, the note number 3, and all the relevant internal control ethical questions. So when you're looking at a question on fixed assets, take into account these are all the possible types of exam questions you could face in the exams and you could be exposed to when you are writing some kind of assessment. Okay, so if we're looking at fixed assets, again, remember a quick recap or a mind map so that we set the tone for the lesson. Remember the methods of depreciation that we use. You have 2 types of depreciation, 2 methods of depreciation. One is where we're using the cost price, and the other one is where we're using the carrying value to record the 2 methods of depreciation. Right. Then we also know that our asset disposal account is an interim nominal account. It serves a particular purpose. Once it has achieved that objective, then it self-destructs. In other words, it closes by itself. You'll notice the debit side will be equal to the credit side, and therefore you will then have that account serving its purpose to determine what do we want from the asset disposal account. 1 or 2 possible. The possibilities are 1, either a profit on sale of asset, or 2, a loss on sale of asset. Okay, what do we remember? That if our selling price, let's write this down, if our selling price is greater than our carrying value, we're going to get a profit. That's right. And if our selling price is less than our carrying value, we're going to get a loss. Okay. Let's go into the next question. It tells us here, information. You are provided with information from the books of Ash Traders. You are expected to prepare the asset disposal account, calculate the depreciation for the year, prepare the note to the financial statement on the 28th of February 2019 for fixed assets. They're telling you that a total column is not required. Okay. We start off by looking at the information that we have here. These are our balances at the end of the year. Very, very, very important. Notice it says here, at cost on the 28th of February 2019. And this obviously means that your year started on the 1st of March 2019 and ends on the 28th of February 20, have I got that right? Sorry. It's 1st of March 2018, ending on the 28th of February 2019. Okay, that's my financial year. It's important, guys, very important, to establish what's the financial year you're working with. Clearly, you can see here, if you know your year started in March of 2018 and ended February 2019. So that's the financial year that you're working for. Those dates are important because obviously it's going to impact on your calculations. Right, what else do we know? We know that these balances for accumulated depreciations will be your balances at the beginning of the year. As you can see, 1st of March 2018. Right, moving further, we are told on the 1st of February 2019, JJ Construction was paid 37,000 Rand for what? We were paid for repairs to the floor and the building of a new storeroom. The total amount has been debited to land and buildings. Keep that in mind because obviously it's going to impact when I'm doing my calculation. New equipment costing 40,000 was bought on the 30th of November. This has been properly recorded. Equipment is depreciated at 10% per annum on the diminishing balance method. Right, a quick one here. When we're looking at the 2 methods of depreciation, one is your cost price method, where you calculated your depreciation on the cost price of an asset, and the second one is your diminishing balance method, where you calculate your depreciation on the carrying value. And how do we get the carrying value? Cost price minus accumulated depreciation will give you carrying value. Okay. Then we are told that an old vehicle was traded in on the 1st of January 2019. The cost price of this vehicle was 120,000. The accumulated depreciation was 84,000. Depreciation is calculated at 20% per annum on cost. The trade-in offered by Wise Motors was 13,500, and the cost of the new vehicle bought was 261,000. No entry has been made for these transactions. In other words, they're telling you that none of these entries were recorded. Okay, keep that in mind, very important. So let's start with the depreciation on the vehicle that we traded in. Step number one, we're calculating now the depreciation on the sold vehicle or the traded in vehicle. Take your cost price, which is, they told you here, 120,000. Therefore, you take 120,000 as your A, right? Your rate is 20%, 20 over 100, times your time. Now, this is important. When did the trade-in take place? The trade-in took place on the 1st of January, meaning you have used this vehicle for March, April, May, June, July, August, September, October, November, and December. That will give you a total of 10 months. Clear? That's very important, because if you get that part wrong, your calculation is going to be wrong. Okay? So this means, therefore, that if you look at your calculation there, you can see times 10 divided by 12. Remember the T part of our art? There we go. We've got the amount, we've got our rate, and we've got our time. Let's do that calculation. So we got 120,000 times 20% times 10 divided by 12. And this will give you a figure of 20,000 Rand. So what is this 20,000 Rand? This is what we call our pro rata depreciation. Okay? This is the depreciation on the asset that we are disposing of, but for this year, how much of the vehicle did we use? We used it for 10 months, and the pro rata depreciation on that 10 months amounted to 20,000 Rand. So therefore, step number one, remember I said, and I'm nagging now, because I want you to please make sure, whenever you're doing a question on asset disposal, to draw up the table. This table for asset disposal is of extreme importance. As you will see, and as you have seen already, that once you have the information in here, it makes your task much, much, much easier. Okay, so that one is done. The depreciation entry is, the depreciation amount is calculated to be 20,000 Rand. What else do we know? We know that the cost price of this vehicle was 120,000. Okay, so here we go. The cost price was 120,000 Rand. Let's bring in the cost price. Here we go. Cost price 120,000 Rand. What else do we know? We are told that the depreciation, the accumulated depreciation rather, on the 1st of March was 84,000 Rand. Remember, that is your balance at the beginning of the year. That means, what was the depreciation on this vehicle that I disposed of at the beginning of my financial year? It was an amount of 84,000 Rand. Therefore, in my table, I start off with the 84,000 Rand. Always start off with the balance at the beginning of the year. Right, now what do? Add my current depreciation. Watch what I do here. I say plus the 20,000. Where does it come from? From my calculation. I've already calculated that 20,000. That means for this financial year, from March until when I dispose of the asset, that depreciation worked out to 20,000 Rand. Add the two together will now give you your total accumulated depreciation of 104,000 Rand. So it's your opening balance plus the current depreciation will give you your total accumulated depreciation, in this case here, 104,000 Rand. Okay, next step. What do I now do? I now calculate my carrying value. What is my carrying value? It is my cost price minus the accumulated depreciation. So 120 minus 104,000 will give me a value of 16,000 Rand. That is the carrying value. Now, very important, keep this in mind. In fact, when you're doing this, put a big 3 there to tell you you're going to use that figure when you come to note number 3. Okay, so now I bring in my selling price. I'm told that, let me get the information there. The trade-in value was offered by Wise Motors was 13,500. So they offered us an amount of 13,500 as our trade-in. So that is my selling price of 13,500. The next thing that you ask yourself, come on guys, you should be shouting out the answer. What do? Compare my selling price with my carrying value. Yes, let's do that. My selling price is 13,500, so there we go, selling price. Is it greater or less than my carrying value? My selling price is less than my carrying value, which was, in this case here, let's put the figures down. You can see your 13,500 is less than your 16,000, which is your carrying value. Okay, so this means therefore you've made a loss of 2,500. Okay, so without making a single accounting entry, you've already ascertained that on this particular transaction, you've made a loss of 2,500 by comparing your selling price with your carrying value. Okay, now we go into the account. Step number 1, transfer your cost price. Debit asset disposal, credit vehicles. There we go. There's my 120,000. Now relate it to your table, guys. Use the information from your table. Here you can see there's your entry, debit asset disposal, credit the vehicles account. Number 2, what do we have to do with the depreciation? Debit depreciation, credit accumulated depreciation. Now watch this. Very, very, very important. When you are showing your asset disposal account, right? Start off with your accumulated depreciation. Obviously, your contra entry is debit accumulated depreciation, credit my asset disposal. Therefore, in my asset disposal, watch, 84,000 was the first figure in my table, plus the 20,000 to give me a total of 104,000. It's not new. You've calculated it. There it is. And the layout here also helps you when it comes to your asset disposal account. Your contra entry, once again, debit accumulated depreciation, credit your asset disposal. Okay, step number 3, the carrying value. What do I do with it? Does it impact on my ledger account? No, it does not. But it will impact on note number 3. So what was my, so that one I know it's going to go to note number 3. I come to my selling price of 13,500. How was the asset sold? It was traded in. Come on, we've done this. We should know the answer. Yes, it is. Creditors control. It means a debit to creditors control and a credit to asset disposal, 13,500. And here you see you have a loss on sale of asset of 2,500. What did we say? That your asset disposal account is an interim nominal account. It serves a purpose. Has it served our purpose? Certainly it has. What have we ascertained? We've ascertained that there is a loss on sale of asset of 2,500. Notice that adds up to 120,000, and if you add that up, it gives you 120,000 Rand. Okay, guys, what have we done in this segment? We've done the asset disposal account. And now we're going to do all the calculations necessary to complete note number 3. You want to know more? Stay with us. See you just now. Welcome back, accounting boffins. Right? We're busy with asset disposal, fixed assets, calculations for depreciation, working on the old, the sold, the new, and everything that goes into a question with regards to fixed assets. Okay, quick recap. I think it's important that we know that when we're dealing with an asset disposal account, you bring in all the components, the depreciation for the current year, the cost price, the accumulated depreciation. Obviously, the carrying value is not used, but it's used for note number 3, and then the selling price. What's the purpose of the asset disposal account? Once again, to determine whether we have made a profit or a loss on sale of asset. Once that is done, the account then closes off. I often use the term, it self-destructs because it closes off. The debit side equals to the credit side and the account ceases to exist. So it's an interim nominal account. Okay, remember we're now calculating the depreciation for the year. We start off by working with the first one we're going to be working with is the vehicles, right? Okay, step number 1, look at your vehicles. At the balance you had an amount of 507,000. However, we know that from the 507,000, we sold the one vehicle to the value of 120,000. That gave me a remaining balance of 387,000. Let's do that. Here we go. There you see 387 is this will be your remaining vehicles or the unsold component of your vehicles. Right, let's do that. So it's your 387,000 times the 20% because we're working it out on cost. And that will give you a value of 77,400. So there we go. We've got the 77,400 for the vehicle that were unsold or your remaining vehicles. Okay, now if you look at the sold vehicle, remember on the sold vehicle, we've already calculated our depreciation in our previous segment. Let's just get that figure so we know what it is. There we go. It was the 20,000 Rand. So in this calculation here, remember the sold vehicle had a total depreciation of 20,000 Rand. Right, did we buy a new vehicle? Let's check. They told you that the cost of the trade-in, we sorted out the trade-in, the 13.5, and the cost of the new vehicle bought was 261,000 Rand. Now, immediately I know this is now the new vehicle, right? And if I look at the new vehicle, step number 1, once again, I'm going to use art, amount, rate, and time. Time. That T is very important in your calculation. Okay, so the cost price of the vehicle was 261,000. That's your A. Your rate is 20%. That's your R. And your T. Now, when did we trade in this vehicle? Remember, it was traded in towards the end of the year. So for how many months did we use this vehicle? We only used it for 2 months. You recall, the old one was used for 10 months. Clearly, you use this one for 2 months. So let's do this calculation. And it will be my 261,000 times the 20% times 2 divided by 12. And that will give me a figure of 8,700. Okay, so that's my depreciation on my new vehicle. So in other words, on this, let's work out now. We can say sold, old, and new. Can't we? Sold we know was 20,000. Old, let's get the figure for old. We worked it out. Old was the 77,400, and my new we calculate as 8,700. There's my new. So in other words, you now add all these components. What do you add? 8,700 plus 77,400 plus your 20,000, and this will then give you your total depreciation here of 106,100. So this 106,100 is the total depreciation on your vehicles. Once again, guys, three components: sold, old, and new. You want an easy way to remember that? Come, I give it to you. Sun. Do you see it? Sun. What do we mean by sun? Sold, old, and new. In this way, you'll know whenever you're doing your calculation, look for the sun. Sun, sold, old, and new. Okay. Now we go on to the vehicle. We've done the vehicles. Let's do the equipment. We've done this one here. This one is done and dusted. Let's go to the equipment. New equipment costing 40,000 Rand was bought on the 30th of November. This has been properly recorded, right? And they're telling you that equipment is depreciated at 10% per annum on the diminishing balance method. So, step number one, look at your equipment and you see you've got a figure of 448,000. Now, be careful. The 448,000 includes the new equipment. How do we know that? Because we are told that this has been properly recorded. It's part of that figure. And you have to see that in order to do your calculations, remember we said we separate our calculations. So therefore, you take your 448,000 and obviously let's work with the new first. So the new equipment is 40,000 Rand times your rate, which is 10%. So the amount, the R and the time, when did we buy this equipment? Obviously they must have given you a figure. This equipment was bought on the 30th of November. So it's obviously the 3 months you're working for will be December, January, and February. So therefore, in your calculation now, you say 40,000 is your new equipment. Now, a question just arises here. Why am I not subtracting its accumulated? Because it's a diminishing balance method. Very simple. Because it's new, it does not have any accumulated depreciation. So obviously, it's the 40,000 minus 0. Got that? So 40,000 times your 10% times 3 divided by 12. Let's do that calculation here. Here we go. It's 40,000 times 10%, okay, is equal to that, times 3 divided by 12, and this will give you a figure of 1,000 Rand. So there's your 1,000 Rand. It's your depreciation on your new. Right. So in vehicles, you had one component which was your new. You also had old equipment, right? So here we go. Let's find the old equipment. Step number one. Watch what I do. You take the 458,000, which is given to you, minus the 40,000, because that's the new one on which we've already calculated our depreciation. And why am I subtracting it? Because it has been recorded and it is part of the 458. So I take it out of there. This gives me, obviously, 458 minus the 40. Now, why am I subtracting the 258,000? Because my method of depreciation is diminishing balance method, right? And diminishing balance method, I know, is cost price minus my accumulated depreciation. So therefore, it's the 458 minus the 40. This is the new vehicle that you are removing. Remember that. Okay, so let's do that calculation. Here we go. 458,000 minus the new one of 40,000. That leaves us now with only the old equipment, which is 418,000 minus the 258,000, which is my accumulated depreciation, and it gives me a figure of, let me just redo that calculation, 458, right, minus the 40,000 will give me 418,000 minus 258,123, and that gives me a figure of 160,000. I think we've got an error here, so not a problem. Let's just fix this error up while we're working on it. We actually have to get a figure of, I think there should be 268,000. Let's do that and see what happens. If we take 458,000 minus the 40,000 will give me 418 minus 268,000, and that will give me a figure of 150,000. Obviously, you can see that this figure here will probably have to change to 268,000. So now, if you do this calculation, you get a figure of 15,000 Rand for your depreciation on your old equipment. So now you've got your two components. Your total depreciation would be the 15,000 on the old and the 1,000 Rand on the new, to give you a total depreciation of 16,000 Rand. Okay. We're now looking at our tangible asset in terms of land and buildings. Right. We start off with our carrying value at the beginning of the year, which was 843,000. Okay, now let's look at the information that we have. We are told that our land and buildings is 880,000 Rand at the end of the year. Okay, but remember, if you're looking at the 880,000 at the end of the year, you know that we had purchased, that there was an additional storeroom that was built, and they had included a charge there which was not supposed to be there. Let me take you back to that one there so you can see exactly what we're talking about. There was, we need to find that one there where they, it was in our, I think in the start of the question, if I remember correctly. Yes, dear. We paid them 37,000 Rand for repairs and a new storeroom of 26,000 Rand. That means, therefore, that in this calculation year of ours, when it comes to the land and buildings, we have to make sure that we only bring in the 26,000 Rand. Clearly you can see. So, if you took the 880 minus the 11,000 would give you 869, and 869,000, let's do this here, 869,000 minus the, what figure are we looking at? 26,000. 26,000 will give you the 843,000. So there we go. There's my opening balance of land and buildings, right? There's my disposal, it's not a disposal, it's supposed to be part of my additions, right? Because we did not sell the land and buildings, so this figure is misplaced here. It actually should fit into additions of 26,000 Rand, and there you got your closing balance. 843 plus 26 will give you 869. Okay, next one. This was the asset that we disposed of, that was your vehicles. So once again, looking at your disposal of vehicles, remember, you start off with your opening balance of 507,000, subtract your accumulated depreciation of 273,000, will give you your carrying value at the beginning of 234,000. What do we know about vehicles? There was an addition. We bought a new vehicle for 261,000. We've dealt with that. Remember what we said, and this is very, very, very important here, guys. If we look at this one here, I want to bring this to your attention once again. Here we go. Can you see? Carrying value of 16,000 Rand. Remember we said a big 3? So therefore we're showing you now in note number 3 where you say disposals at carrying value. Obviously you bring in your depreciation, which we've calculated already, and then obviously you now take your closing balance of your vehicles minus your closing balance of accumulated depreciation, and that will give you your carrying value at the end of the year. Okay, the next one that we look at is our tangible assets. Here again, you start off with your carrying value at the beginning of the year, 150,000. Your opening balance was 48. So 48, bring in your additions. You know you bought for 40,000 Rand, the new equipment, right? Your disposals, there was no disposal of equipment, but there was depreciation of 16,000 Rand. And obviously, you now work out your closing balance at the end of the year minus your accumulated depreciation, and that will give you your carrying value at the end of the year. Okay, so what have you seen? You've seen how we've done the calculations for depreciation. Remember, son, sold, old, and new. Then show all your calculations and bring in that information in note number 3. Please check in note number 3 whether the balance that you are given is your opening balance or your closing balance. Sometimes you are given the closing balance and you have to work backwards, right? Keep that in mind. At other times, you are given the opening balance and you have to actually work downwards. That means that way. So depending on how and what information is provided to you, you will then decide which way to do your calculations. You must be able to work both ways, from top to bottom and from bottom up. Okay, guys, when you come back, we'll do another question on asset disposal to ensure that you fully understand the section. And yes, I'm getting the feeling that you're beginning to enjoy the calculations, and that shows that once you enjoy doing something, you're going to ace it in the exams. See you just now.